Watch video 33 on Chapter 8 Taxation from the Workbook for NISM Series 5A, Mutual Fund Distributors Certification Examination, and review the multiple choice questions and answers. 1. Which section of the Income Tax Act exempts all the income earned by mutual fund schemes from any tax? A. Section 80C. B. Section 24B. C. Section 10, 23, D. D. Section 35AD. Answer, C. Section 10, 23, D. 2. What is the income tax status of mutual fund income in India? A. Fully taxable. B. Exempt from income tax. C. Taxed at a flat rate of 15%. D. Taxed at a marginal rate. Answer, B. Exempt from income tax. 3. What is the primary objective when making an investment in mutual funds? A. Tax avoidance. B. Generating high returns. C. Securing dividends. D. Getting investment returns. Answer, D. Getting investment returns. 4. Which type of mutual fund income is taxable at 10% above Rs 1 lakh in a financial year? A. Short-term capital gains. B. Long-term capital gains from equity-oriented funds. C. Dividends. D. Interest income. Answer, B. Long-term capital gains from equity-oriented funds. 5. What does IDCW stand for in mutual fund terminology? A. Investment dividend capital withdrawal. B. Income distribution cum capital withdrawal. C. Initial dividend and capital withdrawal. D. Investment dividend and capital withdrawal. Answer, B. Income distribution cum capital withdrawal. 6. In which scenario is the benefit of indexation applicable for capital gains? A. Equity-oriented mutual funds. B. Non-equity-oriented mutual funds with a holding period of more than 3 years. C. Dividends from mutual funds. D. All types of mutual funds. Answer, B. Non-equity-oriented mutual funds with a holding period of more than 3 years. 7. What happens when the selling price of a mutual fund unit is higher than its purchase price? A. Dividend. B. Capital loss. C. Interest income. D. Capital gain. Answer, D. Capital gain. 8. What is the short-term capital gains tax rate for equity-oriented mutual funds? A. 10%. B. 15%. C. 20%. D. 30%. Answer, B. 15%. 9. What is the tax treatment for long-term capital gains from equity-oriented mutual funds exceeding Rs 1 lakh? A. 5%. B. 10%. C. 15%. D. 20%. Answer, B. 10%. 10. What kind of mutual funds are classified as non-equity oriented? A. Funds with more than 65% equity exposure. B. Funds with less than 35% equity exposure. C. Index funds. D. Arbitrage funds. Answer, B. Funds with less than 35% equity exposure. 11. What is the marginal tax rate applied to? A. Short-term capital gains from non-equity oriented funds. B. Long-term capital gains from equity-oriented funds. C. Dividend income from equity-oriented funds. D. Indexation adjusted capital gains. Answer, A. Short-term capital gains from non-equity oriented funds. 12. What does indexation adjust for in calculating capital gains tax? A. Changes in mutual fund performance. B. Inflation. C. Interest rates. D. Changes in NAV. Answer, B. Inflation. 13. What happens when the selling price of a mutual fund unit is lower than its purchase price? A. Capital loss. B. Capital gain. C. Dividend income. D. Interest income. Answer, A. Capital loss. 14. For long-term capital gains to be applicable on equity-oriented funds, what should be the minimum holding period? A. 6 months. B. 1 year. C. 2 years. D. 3 years. Answer, B. 1 year. 15. Which type of investor may have different tax treatments for their mutual fund investments? A. Resident Indian investors. B. NRIs. C. Non-individual investors. D. All of the above. Answer, D. All of the above. 16. What is the grandfathering of capital gains? A. Exempting gains earned after April 1, 2018. B. Exempting gains earned before January 31, 2018. C. Taxing all gains earned before 2018. D. Reducing tax on all capital gains. Answer, B. Exempting gains earned before January 31, 2018. 17. How are capital gains from equity-oriented funds treated before the Finance Act 2023? A. Exempt from long-term capital gains tax. B. Taxed at 20%. C. Taxed at 15%. D. Taxed at 10%. Answer, A. Exempt from long-term capital gains tax. 18. What is the holding period for long-term capital gains in non-equity oriented funds? A. 1 year. B. 2 years. C. 3 years. D. 5 years. Answer, C. 3 years. 19. What is the tax rate for long-term capital gains with indexation for non-equity oriented funds? A. 10%. B. 15%. C. 20%. D. 25%. Answer, C. 20%. 20. What tax rate is applied on short-term capital gains for non-equity oriented funds? A. 15%. B. Marginal tax rate. C. 10%. D. 30%. Answer, B. Marginal tax rate. 21. How is dividend income from mutual funds treated? A. It is tax-free. B. It is taxed as capital gains. C. It is taxable based on the investor's income tax slab. D. It is taxed at a flat rate of 15%. Answer, C. It is taxable based on the investor's income tax slab. 22. What tax structure applies to capital gains from equity mutual funds when sold after 1 year? A. 15%. B. 10% beyond Rs1 lock. C. Exempt. D. 20% with indexation. Answer, B. 10% beyond Rs1 lock. 23. What happens if an investor realizes capital gains below Rs1 lock from equity-oriented mutual funds in a year? A. Gains are fully taxable. B. Gains are exempt from tax. C. Gains are taxed at 15%. D. Gains are taxed at marginal tax rate. Answer, B. Gains are exempt from tax. 24. Which of the following is an example of a non-equity oriented fund? A. Arbitrage funds. B. Debt funds. C. Aggressive hybrid funds. D. Equity savings funds. Answer, B. Debt funds. 25. Which of the following is taxable as short-term capital gains irrespective of the holding period? A. Debt funds. B. Equity mutual funds. C. Hybrid funds. D. Arbitrage funds. Answer, A. Debt funds. 26. What is the tax rate for long-term capital gains from equity-oriented funds before April 2018? A. 0%. B. 5%. C. 10%. D. 15%. Answer, A. 0%. 27. For what type of income is the concept of net asset value grandfathering net asset value applied? A. Dividend income. B. Interest income. C. Capital gains from equity mutual funds. D. Rental income. Answer, C. Capital gains from equity mutual funds. 28. What is the purpose of indexation in capital gains calculation? A. To decrease the capital gains tax rate. B. To adjust the cost of acquisition for inflation. C. To increase the redemption value. D. To exempt the gains from tax. Answer, B. To adjust the cost of acquisition for inflation. 29. How are mutual funds classified as equity-oriented? A. Funds with more than 50% in equity. B. Funds with more than 65% in equity. C. Funds with less than 35% in equity. D. Funds with only equity holdings. Answer, B. Funds with more than 65% in equity. 30. What is the surcharge in the context of mutual fund taxation? A. A flat tax rate on capital gains. B. Additional tax calculated on base tax. C. Tax levied on dividends. D. Tax relief given on capital gains. Answer, B. Additional tax calculated on base